Using an IRA in a 1031 exchange. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's video, I'm going to discuss using a 1031 exchange and an IRA. So you may be saying, hey Adam, I don't understand. 1031 exchanges are used for and by real estate investors to defer tax on their real estate investments. Whereas in an IRA, when an IRA owns real estate, it doesn't pay tax. So what's the condition, what's the connection between the 1031 and an IRA? And actually, it's a good point. There generally is not a connection between 1031s and IRAs. IRAs in general do not need to do 1031s. Why? Because all gains, income are tax deferred or tax-free in the case of a Roth. So that means if you buy a piece of real estate in an IRA for $100,000 and in 5 years, 20 years, 40 years, it's now worth $6 million, there's no tax. All those gains go back into the IRA without tax. And if it's a Roth, then you can pull that money out and take a Roth IRA distribution tax-free so long as you're over the age of 59 and a half and the Roth's been open 5 years. So do you really need to do a 1031? In most cases, no. An IRA does not need to do a 1031. So what is a 1031? It basically is a strategy based off section 1031 of the tax code that allows real estate investors to defer the gains on the sale of the real estate by finding a replacement property within 45 days that's like kind and closing within 180 days. So it's a super important technique used by a lot of real estate families to defer tax, right? And the idea is, hey, we have all this real estate for many years. Let's keep doing like-kind exchanges. And then ultimately when we die, we'll get a step up in basis. And then our kids can pull that money out without any tax because the basis, which means the difference between what they paid for it and what it's worth, will evaporate. And now they'll get a basis stepped up to fair market value. So that's been strategy used by many real estate families across the United States for many years. But in an IRA, you don't really need the benefits of the 1031 because an IRA has its own built-in deferral or tax-free growth. So it has the same concepts of a 1031, but you actually don't even need to do a replacement property or have to deal with 45 days or 180 days to close because there's no tax. Whether it's held for a day, a week, a year, 6 months, 10 years, no tax. This is the only time you will do a 1031 with an IRA is if your IRA uses leverage. If your IRA uses a non-recourse loan to buy real estate and you want to sell that real estate, if the loan is still outstanding when the IRA wants to sell it, there's a tax called unrelated business taxable income tax that could apply to a portion of those gains. Whereas if you do a like-kind, do a 1031 from IRA to IRA, you can defer potentially the tax on that sale of the asset based off the use of non-recourse loan. But if you're not using a non-recourse loan and you're using an IRA, you can keep buying and selling real estate. Don't have to worry about deferring gains. You don't have to worry about taxation. So the 1031 doesn't really have any value. However, if you're using a non-recourse loan to buy real estate and you don't want to pay that UBIT tax, then doing a 1031 with the IRA to another asset or property of like kind owned by the IRA could defer the tax on the use of the leverage. So that would be the only real reason and the only time you would probably do a 1031 with an IRA.